Hello, everybody. Happy Wednesday to everybody. Hump Day. Those of you in my room know we always play that little Geico Camel little ditty there, which we all like. And you know what? I think I'm going to do that right here for everybody because not a lot going on in the market. So listen in, everybody.
Guess what day it is? Huh? Anybody? Julie, hey, guess what day it is? Oh, come on, I know you can hear me. Mike. What day is it, Mike? Listen, guess what today is?
It's hump day.
Woo-hoo!
All right. That one never gets old. Sorry about that, guys. Had to do it. All right. What's going on in the markets? Yeah, a little bit lower right now. S&Ps are actually down at their low of the day right now, down 15 points or so. But still, just like we've seen earlier in the week, not a lot of activity. In fact, when I look at QQQ volume today so far, we're seeing 12 million shares with an average daily volume of 37 million. Out here behind me in the S&Ps, I was actually just talking to one of the brokers because I called down here, and he said, we're just watching the paint dry today. So, there could be a little bit of profit taking headed into some big eco data numbers remaining in the week here with PCE coming out. Some, rhetoric, maybe some geopolitical wrangling I'm seeing coming out of some of the UN announcements with Russia. Is that going to, affect the markets? Who knows? But right now, nothing major. S&P's down about 15 points, which is just a little over 0.2%. Am I coming in loud and clear? Can everybody hear me? Can everybody see me okay? Give me a shout out in the chat, please. That would be awesome before I move on, because I'm going to go over a few stocks and then what I really want to cover today. Thank you, Thomas. Since there's not a ton going on in the market, I want to cover moving averages, specifically 50, 200-day moving averages, to see why we use them and why they're really important. One thing I want to continue on first here from something we talked about yesterday, Visa. Okay, remember we talked about our Visa position yesterday, and what we started with was originally this position right here. We were along the 275, 270 put spread. Okay, the news that came out yesterday with the Department of Justice and filing an antitrust suit obviously helped tremendously as the stock just got absolutely butchered. So yesterday, what we decided to do, and we hadn't gotten filled when we were together during the live stream yesterday, but we ultimately did wind up getting filled later in the day, is rather than take some of the position off, which we would have done if we thought Visa kind of was done moving down, okay? What we did as volatility increased and option pricing got more expensive is we added in a spread. So we added in selling this 267.5, 265 put spread. So what that did was when we got filled, it put us into what is known as a put condor position. Now, for those of you who are maybe beginning, just starting out, or maybe even if you've been trading a while, but you're really just trading simple puts and calls or simple spreads, some of the option strategy names, they can get really wonky. And you might look at them and say, oh my God, I could never trade a condor. I could never trade a butterfly because they sound kind of weird. What you have to remember is any of these strategies, any of these positions, what they really are is just a combination of a couple other positions. So if we look at what we have right here in Visa, we have two spreads. We have a long $5 wide put spread. We have a short $2.50 wide put spread. Okay, that is called a condor. Now, you may have heard of a terminology, iron condor. Anytime the word iron comes into a strategy, whether it's iron condor, iron butterfly, whatever it is, that means that there are options on both sides of the ledger, both calls and puts. Here, this is just a condor because these are all put options. Okay, so net bottom line is we got into this position for $1. Okay, it's now trading right around $2. We did take half the position off today at $1.75. Just some risk management. And we're going to let, the rest of it here kind of hang, let it marinate a little bit, see what the stock does. Ultimately, if we held on to this all the way to expiration, which is still 4 weeks away or so, okay, it's on the 18th of October, the best place, just like any position you are going to have on, any of you that are trading that have an option position on, the absolute best place for that stock to go at expiration is to the short strike. Because at the short strike, the option that you may have sold becomes worthless or close to worthless, and the options that you hold, the long strikes, are maxing out while the short strike is zero. So anywhere here between 270 and 267.5 at expiration would be the optimal place. Now, I guarantee you we're not holding this position until expiration. We will manage it. We will be out of it before then. Okay? Does everybody understand that? Okay? If you don't, just let me know in the chat if you do. And also let me know in the chat here, guys, if there's a stock you want me to look at today, because I want to dive into the moving averages right now, why we use them, bring in some charts. But let me know in the chat, please. And also, just to let everybody know, we do have the real wheel for our swag set and ready to go. I'm going to show it to you right here. So we will be spinning the wheel at the end of the day today. Okay, we will be spinning it here. So while I've said that, if all of you can, like we asked yesterday and the day before, if you want to be entered into, just the wheel spin at the end of the day for some Prosper swag, just write me in the chat and we'll get your name in there and we'll spin it. Okay, somebody wanted to look at SMCI. Okay, who was that? Let me go back here. Motown guy. Is that like heard it through the grapevine guy? Okay, so SMCI was on a really nice run. Pull this up here. Here's a 3-month chart. Okay, here's a 3-month chart of SMCI. It's still probably in a bearish trend overall, but really trying to break out. There's not much I'd really want to do right now. I will tell you though, however, and we talk about this, see this area right here? See that area right there? The gap, where there's a gap in one candle to the next. Okay, that gap, that closing candle right there is 547.64. Hang on, is that right? Nope, wrong candle. There we go. Yeah, 547.64. Now, I know we're a ways away from there. That, to me, is going to be a signal to sell. That is going to be a spot of some resistance there if that gap gets filled. Again, I know we're not close to there right now, but honestly, if I look at this chart, it's really kind of benign. So $100 away or so, $90 away. Could get there. Never know. Motown guy, you got it. And if you see something different, Motown guy, put it up here. Let me know. We'll take a quicker look here. Okay? All right. I want to talk about moving averages here, and I'm going to bring in some other charts. On these charts here that you see right here, I have two of them listed. The red line up there is the 50-day. The blue line there is the 200-day. But I'm going to bring in my Thinkorswim charts right now. Okay, so actually let's use SMCI as an example for 50 and 200-day moving averages. Now, let's talk about why we like to use moving averages first, especially, when there are literally, pretty much an unending amount of technical analysis we could use. And you may have your favorite go-tos, okay? I love moving averages, especially the longer moving averages. Now, why do people use moving averages? Honestly, it helps calculate, okay, or smooth out price data, okay? Rather than taking just a particular point in time, it gives us more data for where a stock has been, may go to. Okay, it helps smooth it out. Okay, and what it does, the impacts of like random short-term fluctuations are mitigated. So if you're day trading here, you're not going to use a 50 or a 200-day moving average. You're going to use a real short time span, because if you're day trading, you do care about every tick. You do care about all of those fluctuations. Okay? But if you're more swing trading or putting positions on that you may hold for a little bit longer time, you don't want to use a daily chart. Excuse me, a minute chart. You want to use a daily chart. And I'm going to bring in here to show you what the difference is. So on this chart right here, again, the red line is the 50-day moving average. The blue line is the 200-day moving average. Okay? Can everybody see that? Motown guy, let me have someone reach out to you. If you can email us, I'm going to just give you the same email address for the swag. Email me a note there, Motown guy, okay? All right, so everybody can see those two lines, right? Those are daily charts. Again, since we're not day trading and we don't really care, honestly, about tick by tick, we want to use those daily charts, which helps smooth out the data as well. Now, let's take a look. The 200-day moving average on the daily chart is 703. The 50-day moving average here on the daily chart is 562. Now watch what happens if I change these from a daily chart to a minute chart. Okay, look what happens here. Now the 200-day moving average is 465 and the 50-day moving average is 460. Pretty darn close to one another. If I'm day trading, if I'm looking to scalp ticks here and there, I'm going to use that minute chart. And on Thinkorswim here, you go up and just change the chart right up here. But I'm not day trading. Mike Shore uses a minute chart for the most part. He may even use a 5-minute chart, but he's definitely using a shorter time frame than the daily charts. Okay, so that's in terms of time frame daily chart, minute chart, one of the differences there. Now, a lot of people will ask, okay, what's the difference between simple moving average, SMA, and exponential moving average? Who knows what the difference is? Who knows what the difference is between the two? While I wait for some answers, I'm going to update our wheel with your names here, guys. Okay, put your answers in here. If you can tell me what the difference is. Okay, so the simple moving average pretty much explains itself. What it is, you take a period of time, whether it's 9 days, 50 days, 200 days, take the closing price divided by the number of days. That's going to give you your simple moving average. It's the average close of where that stock has been over whatever period of time you're using. Okay? Now, some traders will use the EMA, the exponential moving average. Okay? And like Joselito said here, and Robert said, Thomas said, good job. Yes, it kind of compresses the data. Okay? So what it actually does in other terms, it weights the data more heavily for the more recent data. So if you're using a 50-day EMA, it is going to exponentially count in the algorithm, in the math, what happened yesterday and the day before and the day before that, much greater than what happened 50 days ago. Okay, so again, if you are a very, very short-term trader, very, very short-term trader, day trader, whatever it is, okay, you may look to use an EMA. Now, I will tell you, and you know what, I'll bring Charlie Moon in here on another day to talk about that as well. But I will tell you, Charlie Moon still uses simple moving averages. He just adjusts his period of time much shorter. Mike Shore uses simple moving averages. Okay? But a lot of day traders, especially, if they're trading futures, are going to use EMA. Okay? Now, let me point something else out to everybody here. The longer the period of time, the better off, or the more precise that moving average is going to be. Okay? Think about it. If you're studying anything, right? If you're collecting data on anything, the more data you have, typically, the better that data is, the better the result is going to be. Well, the same thing holds for moving averages. If I'm comparing a 50 and a 200, I would always rather use the 200 if possible, because it is going to hold more weight. Okay? Longer stretch of time. Now, in a bull market, and we're still in a bull market, there's no question about it. We are still in a bull market. It is much more difficult to really be able to use a 200-day moving average. Here's NVIDIA, for instance, which I just put up on the screen, and you can see that 200-day average is really nowhere close to where the stock is right now. But if we look at the 50-day moving average, it just bounced off of it. So in a bear market, or should I say in a big market sell-off, okay, like we had the beginning of August, a lot of stocks traded down to their 200-day moving average. That's when 200-day moving average is really, really super important. Okay? Really, really super important. So again, in a constantly upward moving market, it doesn't necessarily come into play too often. But boy, is it powerful when it does. Does that make sense to everybody? Anybody have any questions on EMA, SMA, why we use moving averages? 50 and the 200, those are the most common ones. But a lot of people will watch the 9-day moving average. Okay, let me know. Crystal clear, that's a good thing. That is a good thing. Anybody else? Okay, and if you have not already put me in the chat for if you want to get in the spin wheel, the wheel spin, whatever that is, I've got everybody that has already put their names on here. Please, Joselito, I'll do that right now, and Bill, I'll do that right now. That's great. Please put me in the chat right now. I don't want to forget anybody. Okay, Robert, there you are. Almost, you were almost too late on that. Okay, so, and Jake, I got you. Ryan, got you. And even if you already won, Ryan, I think you won the other day. Actually, you're still eligible to win. We have lots of swag here. Okay, let's talk about Moton. I already got you. Let's talk about crossovers. Death cross, because someone just asked that. I'm going to bring up Visa here for a second. Okay, even though, and we just talked about Visa at the beginning, at the top of the show here, because we had this nice short position on, and Visa's getting hammered, okay? Look at those two lines now. Look at how they are about to potentially cross, just like they did here, okay? So typically, what happens is when we see one of those crossovers, especially when the shorter term chart, so in this case, the red is 50, the blue is 200. So when the shorter term chart crosses over, that is a very, very good indication of a trend. So you can see right here, the red is moving upwards towards the blue right now. So even though Visa just got smacked, okay, even though Visa just got smacked, if the stock if the stock gets back a little bit, okay, if it starts moving a little bit higher, and the red line starts to move above the blue line there, that's a crossover. That right there, guys, that is a golden cross. Someone asked what a golden cross is. Golden cross is when the 50 crosses above the 200, and it can be a very bullish signal. Now, on the flip side to that, and this is really interesting in Visa because just a month ago, and this happened, you can see right on that August 5th, basically, date on the big market sell-off. Here we had the 50 crossing down below the 200. That's a bearish sign. And as I think Robert may have, someone just put that up here. Joselito, there, you were asking about it. Robert, you put it up here. When the shorter term chart, in this case the 50, crosses down below the longer term chart, that's called the death cross. Okay? And that is typically a very, very bearish sign. So that's golden cross, death cross. Now, I will always caution everybody here because as I said, at the beginning, there are thousands, if not more than that, thousands of indicators you can use. Thousands of technical indicators you can use. Okay? So, yes, I love the moving averages, but when I can confirm a signal, whether there's a long bias, short bias, support, resistance, whatever it is, when I can confirm it with something else, that makes that signal even stronger. Okay? And what is that something else? I mean, it could be volume, it could be MACD, it could be RSI, it could be any number of other types of technical indicators. Okay? Joselito, the term golden cross and death cross does only pertain when you're comparing the 50 and the 200. However, the same notion holds. So let's say you're running a 9-day and a 50-day. If the 9-day crosses down below the 50, that's a bearish trend. If it crosses above the 50, that's a bullish trend. But the golden cross, the death cross, that does pertain to the 50 and the 200. Okay? Great. A lot of people will say that even if you see the short term, so a 9-day cross above the 50, okay, they will reference that as a golden cross. I would call that more of a silver cross or a bronze cross. Bullish, but not as strong as when you have that longer pattern. Okay? Does that make sense? Awesome. I love that you keep asking questions here, Joselito. That's great. Boy, we are almost at that time of day here. I know someone wanted to look at AXP, I think. So let me get that up here real quick. Okay, here's AXP. And this has been, just like many stocks here, kind of a buy the dip. Right? Kind of a buy the dip, nice bounce. You can see here numerous times off of the 50-day moving average. Here you got a little dip below and a bounce, little dip below and a bounce right here. So you've got higher highs and higher lows. That is a very bullish chart on AXP. I'm not saying to, just buy into that right here, but it's a very bullish chart in AXP. Okay. Bill, you're very welcome. All right, guys. It is time to spin that wheel. Let's get it done. Let me bring that in here. And clear this up. And I know I got everybody that had put your name in here. It is in here. Okay? So today's winner, we're gonna look for some Prosper swag, one of those great hoodies. I'm not wearing the hoodie today because it's pretty warm in here. I'm just wearing a Prosper polo. So here we go, guys. Let's let it rip. Hey, Robert DeBoer, we got winner chicken dinner. Nicely done, sir. Okay, what you need to do is email me at prosperswag@prospertrading.com. I just put it into the chat. Okay, email me there with your address and the size that you wear, and we will get that right out to you. Guys, if you can smash that like button that you see there on YouTube, that would really help us out quite a bit. We also, I believe, Charlie Moon, who was supposed to do an AI webinar last night, but was sick, is doing it tonight. So if anybody wants to tune in and listen to Charlie about how he trades his AI system, that is at 7 o'clock tonight. And we're going to get a link up here real quick. Yeah, Jake, he is still pretty sick. I know that, but I'm pretty sure he's going to gut it out tonight. There we go. Okay, there is the link right there if you want to listen into Charlie Moon. Yeah, he's pretty sick. He might sound nasally, whatever it is. He will be there. It won't be a recording. All right, everybody. Really appreciate everybody being here. In addition, guys, to me looking at stocks during the day here, if you ever have a suggestion or want to know specifically about something, like we went over moving averages today, we went over VIX the other day, we'll take any suggestions you have. This is what this live stream is for. Okay? So either put it in the chat. You can always email us at that Prosper Swag email address. Appreciate it, everybody. I'll be live on the floor tomorrow. We'll see you at noon. Have a great day, everyone.